All right, so today I want to go over a couple of things in the market, right? So first, we're gonna start out and just take note of the fact that the 10-year yield it is breaking out above that January 2021 high that we had. Remember, that's when stuff first got scary for like when we talked about it yesterday. If we go back to January 2021 for ARKK is a high growth ETF, right? So you got a bunch of speculative stocks in there. So ever since then, it's never been able to recover, right? So going back to the QQQ, it's been the worst performing index so far year to date, right? So today was a weird day where you had the market open up lower, it shot down, and then recover all those losses and closed higher, closed green. So the first thing I want to say is looking at this chart, I want to know where that support was that we broke. So we're gonna come here and we're gonna say, okay, this is where we had some support at that we had broke today, and then we recovered it, right? So we'll say, what was that most recent resistance point? So there we go, right? So the next thing I want to say is, what is the trend line like for this stock, this asset, right? It's an ETF. So we're gonna back out, we're gonna zoom out, and we're gonna go back quite a while, and we're gonna say, okay, I see pullback, a pullback, a pullback, a pullback, a pullback, a pullback. I want to try to connect all those points. So this is what you're doing. So we'll start here. We'll just connect all those points. And you can see how, let's clean this up a little bit. So you can see how starting here, you connecting this point there, there. Every time it's getting to this trend line, it's bouncing. Every single time except here. That bounce was weak. This is what you would call a dead cat bounce, in my opinion. And as a, I'm not gonna say I'm bearish, but I'm bearish. So I feel like the market needs to pull back. So I wouldn't say I'm quite bearish. I just know that it's been way too long since we had a correction, and with rates rising, like I said yesterday, if the theme of what you're investing in doesn't fit under what the Federal Reserve has going on, then it's probably not going to work. So you get these random bounces every now and again. So then the next question might be, okay, where does it reject? Where does it start to pull back? And so I like to use the anchor VWAP. And I'll just put it here at those October lows from that last pullback we had, right? And then I'll take one and I'll put it at, this was a May pullback that we had. So I'll just put it here. So you can see we bounced right there at that anchor VWAP low. We bounced. And it's possible that we could start rejecting when we get up here, right? So you can see that this was a previous resistance point. It's up in there in that supply area that we had, or demand area that we had. So it's more than likely going to become some supply, right? So and then we just put our moving averages on the screen. And you can see over here which color is which. So the 8 is yellow, the 50 is blue, and the green is the 200, right? So looking at all of this, you can see that up in this, when we start getting to around 383, 385, that's when you can probably start to see the volatility pick back up, right? So you're probably gonna have a decent sized move tomorrow. I wouldn't be surprised to see markets go a little bit higher tomorrow. Just some continuation off this bounce, but it was more of a technical bounce. I don't think it was nothing's changed. I don't think technology is just going to all of a sudden start to do really well. I think it just got extremely oversold. And if you look at the Williams percent R, right? So, I mean, we got oversold. So markets don't like to be too oversold, too overbought. So you'll get these bounces or these rejects, depending on what the circumstances is. So a stock that I like right now a lot, and I just added some shares, is Nucor. So you look at that anchor VWAP from those August 2021 highs. See, we starting to kind of bounce right there. Um, and you look at the anchor VWAP from those July lows, they kind of coincide, and it's right below the 50-day moving average, right? So if we take all of that off the screen, the moving average is off the screen real quick. We'll see we got a trend line right here. So you got a bounce, right? You connecting it to a demand area, a bounce, a demand area, right? So we right up in here now. I wouldn't be surprised to start seeing this thing start to bounce, see some bullish price action. So I added like 10 shares today when we were pretty much at the lows. I think right around like 110.50. I added some shares. I'll probably start adding to my contracts tomorrow to see once I see what price action look like. I want to see if I can get it right down here, but if not, I'm cool with averaging in right at this price because we are right below the 50-day moving average, and it hasn't spent too much time down here as of lately. After that first bounce, I mean, you had a monster run from the beginning of last year. You had a monster run, and I mean, of course, you're gonna have some volatility and some pretty nice size pullbacks. So I'm bullish on Nucor. I'm bullish on value stocks, cyclicals with this rising rate environment. And a lot of people will try to tell you stuff like ARKK is viable down here, but even after this candle, this close today, I mean, it's nice, it's cute or whatever, but I can't really see this thing doing too much. Not while we're in this rising rate environment. I mean, like I said yesterday, these companies gotta borrow money, and it's getting costly for the borrow money, and they already not producing money now, so it's just gonna get worse for them, in my opinion. And I'll probably do another video, honestly, but I'll just say it real quick. The Elliott wave theory that I got here for ARKK, I mean, it has it going down to down here. So we down in the 40s. And I mean, I honestly think we probably can make it down there. If you look, that's right near those pandemic lows. So I wouldn't be surprised to see it down there. And one stock in particular that I like the setup on is DocuSign. So I played the flush today, and like a goofy, I took some puts and I was up on them, but I never sold them. So once we broke below that 132 level, I felt like it was time for that flush out. But of course, the market started to bounce. But I bought time, so I'll be able to average in once we get right up here in these anchor VWAP area, right? So I wouldn't be surprised to see a nice little 10-point move or come back up here. You can see his rate at that what was trying to be a support line, then it flushed, right? So this blue line here that I'm talking about. So that would be a nice resistance point, and you can see it coincides with those anchor VWAPs, right? So I took the anchor VWAP from like the gap down and the first day after the gap down. So I mean, it should be in about the same spot, but just to kind of be a little more concise with what I want to see both of them. So that's an area that I'm looking to add to my puts because this is a high conviction play for me, to be honest. And it's always hard to get into your swings because anything can happen. Like you had these random days where you had these bounces. So just looking at this, there is absolutely no support below, and I see no reason why it stops here at 126. I think we at least see 100. That's why I'll start trimming my puts. I probably will fully exit because we probably will see a more serious bounce here. And I guess the risk with short and stuff is that anything can get short squeezed or turn into the whole meme stock rally type thing. And people got to cover positions, so you can see some violent bounces, and those can shake people out of short positions. But it's a high conviction play for me, and I see a top. So we start to blow through that top, then I would get concerned. And I don't think we're going too far past 159 regardless. So I can see the top. So I don't mind averaging in. I don't mind holding. I don't mind being down. It happens. So it's all good. I waited patiently for that break of this level, but the market started to bounce, of course. So sometimes being patient do kind of turn on you. But I did short I was shorting ARK when this was breaking, so I didn't really feel a need to play DocuSign. So when ARK was breaking its lows, I was shorting this, and we made some pretty good money off of that. That's when the Fed meeting minutes was coming out. So I told myself I was short DocuSign once we broke these lows, and we broke them, and it recovered, like I said. But another thing I just throw in there too is Tilray. I mean, I don't know if it's the bottom, but definitely was a good place to add. They reported earnings today. They were profitable, and I think they were like got like they're like a leader in like the German industry or something like that. So they got some good market share in Europe, pretty much. Lost some market share in Canada, but it's not really a big deal. And with federal legalization coming eventually, I still think it's a good long-term hold. But like I said, you got some big downside risk because there go your pandemic lows. So I don't know if we see those levels, but I'm prepared to see them, prepared to buy more because I do believe highly in this cannabis industry here. But this one, I don't even waste my time playing technicals on a stock like Tilray because it just do what it want to do. It's gonna run off of news. It's gonna run off of random bounces. It's gonna just kind of do what it want to do. I think it didn't fail more than enough because if we go to 2021 highs, which was also back in that January timeframe when yields first started to rise. I mean, this thing is down. We get to the top. This thing is down 90% from its highs, like a little under a year ago. So if you look at pretty much any chart of any company that's, I'll call it a speculative stock, right? You look at yields, they started to rise in January 2021, and these kind of stocks started to fall. You look at, DraftKings, um, same thing. So that's in the ARKK as well. So that January, February 2021 timeframe, it's just been all downhill from there, and yields are breaking out, and we know they're going to continue to make a move higher. How high? Don't know, couldn't tell you, but stuff like these stocks are under pressure, and I would be concerned buying any speculative asset, including Bitcoin, any crypto for that matter. But if you long-term investing, I wouldn't be too concerned. And I can do another video on this too. So we kind of got a head and shoulders pattern forming here. If we break this neckline, we at least going to this 38,000-ish level. But I think if we break that neckline, we're probably going back to 30,000. But even here at 40,000, I wouldn't mind buying Bitcoin. I just feel like any speculative asset, I would want to wait to buy them until after the January FOMC, which is like January 25th and 26th. So once that's over with and we hear from Brother J. Powell and the Fed, then I'll be more inclined to buy into speculative assets that I want to hold forever. Be a fine reason to buy Tilray today. Like I said, they reported real good earnings, and I bought some shares in the pre-market right around 6.9, of course. So that's what my cost basis is right now, and that, like I said earlier, I'm more than willing to average in. And so you see my list of crypto that I got here that I'm looking at. Ethereum, I guess it hadn't pulled back as much as Bitcoin did, but all of them have been ugly. So Ethereum up in this 2,800 to 3,000 range would be interesting. They say, don't time the market or don't try to time the market or whatever, but sometimes you just can't buy stuff until you know. So not trying to time it, but timing is everything. So just kind of playing it safe and waiting to hear from Brother J. Powell before I make any more moves. My hand was kind of forced with Tilray today. just because of earnings, and they had good earnings. So I like that. But that's about all that's going on in the market today. You did have banks where, I mean, they didn't break out or do nothing crazy. Just a little red day. But I mean, they're in a supply area. I'm not surprised to see volatility start to pick up. We'll see if they break out or not. I think they have every catalyst to break out, but we'll see if they do. They earnings start on Friday. JP Morgan, Citigroup, and I want to say Wells Fargo report on Friday. So I will keep an eye on those stocks, see if you can get some buying opportunities. I like Morgan Stanley the most right now out of all the banks for a breakout. Well, I won't say the most. It's one of the ones I like the most. If I had to choose two or three, it would definitely be in that category. So Morgan Stanley above 106, if it ever can get there. I literally been waiting for this since September. I remember Labor Day weekend. I think I bought some call options. Well, that Friday going into Labor Day weekend, I think it was. I bought some call options thinking we was about to break out because I think we had got, we had got that, we got monthly jobs data from August, and I think Delta had just hit, and I had downplayed what Delta could have did to the labor market. And I was like, yeah, the Fed definitely about to start tapering. They're going to raise rates, all that stuff, because Jackson Hole had just passed, the Jackson Hole Summit. So, yeah, it was a lot going on with Morgan Stanley. But, yeah, like I said, I'm waiting for this to break out. Wells Fargo been going crazy, but, I mean, we definitely want this to pull back and up in this 51, 52 range. We'll see if it can fill this gap soon. And that'll be a nice place to start entering some long positions because you can see it's breaking out above pre-pandemic levels. So this thing might have some room to run. I mean, that's about it for now. That's pretty much what I'm watching. And we'll see what happens if Cleveland Cliffs can get back down to 21.7. That's when I start getting interested. You see that rate right there. I remember we had a big dark pool order down there, and that's right near that 50-day. See, 50 days blue, 50-day and 200-day movement average. So that's where I get interested in that again. And for now, I'm just chilling for the most part. We'll see what happens, and I'll definitely keep this on your watch list to short once we get back up in here, or we just flush these levels. We'll see what happens in the next few days. Make sure y'all like and subscribe. Join our Discord at investorsanonymous.net. And we have an educational course where we teach about all the indicators that we use, all that kind of stuff. So make sure y'all tune in, and we'll catch y'all for the next video.